Bob Marley comes back from the dead and throws a concert, then I'll book a ticket. I'll be really excited for that. Like, why would Coinbase fail? Yes, if Binance goes under tomorrow, it'll be really bad. There's no reason to believe that's going to happen, so that's stupid, right? And Coinbase, that's the dumbest thing I've ever heard. No offense. Like, it's just like, yes, of course, you can point out something that could theoretically happen with no evidence in the future as a risk, but there's no reason to believe that it will happen, right? AOC could be president next month if everybody in the government dies. Terrifying.
There were a lot of people last year who believed that the 4-year cycle was not valid anymore, while right now, since the price action of Bitcoin has been quite similar to the one we saw in 2022, a lot of people are changing their mind, and they are saying that the 4-year cycle is still valid and that we are going to probably bottom in Q4 this year, specifically in October. What is your take on that? Do you agree or not?
I was one of those people who, at the end of last year, definitely did not think that the 4-year cycle was still intact. The only data point that we had, in my opinion, at that point was that we topped in October, which is a compelling data point when you obviously look back in hindsight, that we topped within a few days of when you would have expected the cycle top to be. But nothing in the run up during the last bull market looked like the previous 4-year cycles to me, or I think somewhat objectively as well. Right. So you had Bitcoin making a all-time high way too early, which people will tell you was because of the spot ETFs, which is true. But if you were looking at the cycle, it hit that point way too soon. Then you never had an altcoin cycle. And I believe that you have to look at the whole broad crypto cycle as, evidence of the 4-year cycle. Maybe not anymore. But we would have expected that any time on the way up that Bitcoin had gone up, obviously that you would expect sideways consolidation on Bitcoin, then altcoins to go crazy. And that certainly never happened, right? We basically have been in an extended bear market for altcoins since 2021, I think you could argue. And so there certainly was no 4-year cycle for crypto, even if there was for Bitcoin. Obviously, our all-time high was muted and there was really no blow off top. Most people expect 2, 3, 4, 5x returns from market peak to market peak throughout the cycle. We topped around 69,000 before and only got to $126,000 this time. So not even a 2x. I think all of those things contributed to the belief that there was no 4-year cycle. That said, if you go back to October now with the benefit of hindsight, everything since then looks like a 4-year cycle bear market, right? So I would say that our downside is equally muted, but that's expected. To be fair, because if the upside didn't even do a 2x, why would we expect a 90% drawdown like we've seen in previous cycles? You would imagine that you would also get, sort of the benefit of less volatility to the downside if you didn't get the exceptional returns to the upside. So I think that's looked like it. This time we'll call it 55, 60%, somewhere in there. But I'll tell you that for me, I look at a lot of reasons. And when we went to 60K for the first time, I don't remember, in February, whenever that was, I said, this looks like a bottom or a bottoming process will start. And my prediction was sort of that we would just chop sideways for 6 to 9 months. And I believe that's still what's happening. Doesn't mean that I will be right. It just means that it's following what I anticipated would be the path then. And there's a lot of reasons for that. So if you look at, charts and sort of take away the emotions, which by the way, we've had peak fear and we've seen crypto fear and greed in fear for longer than ever before. So sentiment also aligns with sort of bottoming signals. When people are rationally fearful. But you have the 50 MA on the monthly chart being hit for only the fourth, I believe, time in history. You have the 200 MA on the weekly, which has always been near the bottom, being hit. It's only gone below that for an extended period of time, more than 1 week once, which was FTX. The other 2 times before that, it either touched it or closed briefly below it and was back above it the next week, which is what we saw once again this time. That's exactly what we saw at the COVID lows, by the way. We saw a huge wick down, which was much more dramatic because of COVID. But then by the next week, back above the 200 MA. We've seen weekly RSI oversold alongside those touches to the 200 MA for only 4 times in history. And this time we have bullish divergence with that RSI, meaning that RSI has made a higher confirmed low while price made a lower low. And the only time we ever saw that was FTX bottom. So yes, we could see a long period of consolidation here, but that could still be a part of this bottoming process that I think we have. That said, if we go straight up again in October, yes, I'll say it looked exactly like the 4-year cycle. But I think it's too early to be convinced of either opinion being correct until we see that there's actually a ramp up in the cycle, right? I think the bear market can't really be confirmed until you get out of it. or that it looked like, previous 4-year cycles, just like we now had to take the benefit of hindsight to look back at when we topped.
Yeah, also, I think that one thing that is missing in this specific cycle so far is the negative catalyst that we had in 2022. So the collapse of all these lending platforms, and at the end, the situation with FTX, which drove the price much, much lower. People are now trying to look for potential negative catalysts, so a sort of new FTX and risks ahead. So we interviewed not long ago the CEO of Xapo Bank, and he was mentioning that he sees two main risks, and those are strategy and Coinbase as the two main centralization risks of the industry. Basically saying that if one of these two companies collapse or have serious issues, that could have very big consequences for the whole ecosystem. What do you think?
If Bob Marley comes back from the dead and throws a concert, then I'll book a ticket. I'll be really excited for that. Like, why would Coinbase fail? Yes, if Binance goes under tomorrow, it'll be really bad. There's no reason to believe that's going to happen. So that's stupid, right? And Coinbase, that's the dumbest thing I've ever heard. No offense to him. Like, it's just like, yes, of course, you can point out something that could theoretically happen with no evidence in the future as a risk, but there's no reason to believe that it will happen. Right? AOC could be president next month if everybody in the government dies. Terrifying for markets, right? So that's stupid. The strategy argument, I find 99% is stupid, but not all the way, because I do think there's a 1% existential risk potentially. But anyone who's looked at strategy and said that they're going to be insolvent, bankrupt, any of the words they use are just influencers who don't understand markets or money. You can't be insolvent when you own 4-point-something% of the Bitcoin supply. They literally have the money. You can't be insolvent when you have the money. Maybe they've put a risky capital structure together, but now, obviously they have years of payments on the dividends already in cash reserve. And the most likely scenario for strategy is that he fades into the distance and becomes less of a narrative, which is probably the best thing that could happen for Bitcoin right now, right? Because nobody wants to be the main character. And the smartest thing he can do, I think, which is maybe what he's trying to do, is become less of a main character. But the fever pitch of strategy FUD was 3 weeks ago, right? That's when it was like going to zero. It's over. He's going to be forced liquidated, the worst case scenario. And he's proven that he has access to capital markets, that he's not irrational. He's doing exactly the things people would have wanted. And now the market can price the fact that he's not going to buy Bitcoin, right? And what happened since all that happened? Bitcoin went up. Right, he started selling a lot. He sold a little Bitcoin and the market went down. But once he took that risk out of the market and sold a bunch, the market went up. Right. And so I think that you can view strategy two ways. Will he be a forced seller? No. And people are, let me rephrase that. People are falsely attributing the risk of his liquidation to the wrong factors. The only risk to strategy is duration. It's that Bitcoin goes down and stays there for a very, very, very long time, at which point we will be in such a horrible sustained bear market that what strategy does is irrelevant. I also heard people make the most obviously bad takes, and I've argued this debate, not because I'm supporting Saylor, just because I like facts, that he should have sold a lot more Bitcoin, $10 billion worth, to do what? Prevent becoming a seller? Why would you sell a massive amount of Bitcoin now, was the big argument for the FUDsters, to avoid having to sell Bitcoin. To me, that's like 4 IQ, right? So I don't understand why you would hurt your shareholders now to prevent maybe hurting your shareholders in the future, right? And so all of these things were stupid narratives that were emotional, that are bottom signals, actually, in fact, generally, that I don't think hold much water. But right now, the best case scenario is that people just say, okay, strategy is no longer the buyer. Like I don't think they're going to be a huge seller. A few thousand Bitcoin here and there is a rounding error. Like they've long put, what does Bitcoin do? 30, 40 billion a day in spot volume on average, right? I am just kind of guessing, but their obligations are 1.7 billion a year. That's nothing, right? So they can do this for a very, very long time.
Yeah, I agree with you that it seems that there were a lot of expectations mounting around the figure of Michael Saylor and this myth of him just being a constant buyer, and that was becoming sort of a problem, because every time this industry sort of idolizes a specific character, then things usually don't turn very well, like we saw, for example, in the past. But now
Yes, but last bear market, do you remember when Bitcoin was 20, 25, and people said Michael Saylor's going to get liquidated and it's all over? And by the way, he sold Bitcoin at $15,000. People forget that he bought it back at 17,000 like a week later, but he sold the dead bottom. So like we had a fever pitch of Saylor FUD at the bottom of the last cycle too, and he sold some Bitcoin and bought it back at the last cycle. So it's if you want to just look at it from a 30,000 foot view, it was a bottom signal last time.
I agree. I agree with you. And I was just saying that I think he's smart in trying to take away from himself this aura of this myth of just being the constant buyer and just being more pragmatic and show the market that even if he sells, it's not a big deal.
Agreed.
So I agree with you. Regarding Coinbase, yeah, that was a very interesting take. I never heard concerns around Coinbase.
Yeah, I mean, if the United States government defaults on its debt in 3 months, that would be a horrible black swan event that we should prepare for. It's like it's not happening.
So now I want to talk about something that we were discussing actually 4 years ago, because we are talking about the 4-year cycle. So I was watching an interview we did in April 2022, and you were mentioning the fact that you had back then a long-term portfolio that was constituted by around 75% Bitcoin, 25% ETH. So those were your long-term holding, as you were saying back then. You were saying that it could change, the portfolio could change according to the situation, but overall that was the main thing. So right now I want to ask you whether this structure after 4 years has changed in any meaningful way.
Not particularly. I mean, it's rebalanced, but it's primarily Bitcoin, ETH, and Solana. So I would say that I've added quite a bit of Solana, as it's gone way down here, because I believe that the narrative around Solana is much stronger, obviously, than it was 4 years ago. I was not one of the ones who was jumping into the FTX FUD to buy Solana at $10, So I missed that bottom, but and so it took me time to get on board and see the institutional adoption of that, and to sort of see Solana as the third, I guess, in that trifecta of assets that you would probably want to hold long term. Not because I think they have the most upside or the most volatility of all these kind of long tail crypto assets, just because I think that they're all relatively safe and will rise over time. So yeah, I would actually say my ETH has come down. It's been replaced by some Solana, and the Bitcoin's gone up a bit in the allocation. So yeah, I mean, at this point, I've just been like buying Bitcoin aggressively. I do actually think like ETH and Solana probably could outperform Bitcoin, but I want to own more Bitcoin with time. And, buying in the 60s and the 50s and even the 70s is pretty, it's mouth-watering opportunity for me.
Now I would like to discuss the launch of this new chain, Robinhood Chain, which is making a lot of noise around. And you said that essentially a lot of people are underestimating the significance of this product. Can you explain why you are so bullish about it?
Yeah, I think just rationally, it's opening the doors to a lot more potential crypto buyers and users who maybe were on the fringe, that are already Robinhood customers and now have a really easy way to access crypto through a clean UX and UI that they're familiar with. So, they have tens of millions of customers. Those are the same people who want to, degen into GameStop and out of GameStop, and who follow Wall Street bets, and who, definitely are the degenerate traders of the non-crypto variety. And I think one of the big challenges for crypto has always been, as I said, UX UI. Like, a lot of people don't still want to go open up, a MetaMask wallet and save their private keys and try to figure out how to bridge assets and do all these things. And Robinhood has put it like right into kind of their familiar territory and feel for their users. And it's really not that complicated to, buy ETH on Robinhood and go buy a meme coin and do all these things and use it within their ecosystem. So I think it's just going to be a familiar access point for a lot of people who are probably, as I said, the people that were like 1% away from, or one step away from becoming crypto users. Also, Robinhood is, pretty in bed with the government at this point, right? I mean, they're one of the larger financial institutions. They're managing the Trump accounts. There's a lot going on there, and I think it's just a huge stamp of approval. And I think it's very bullish for Ethereum, to be quite honest. because they could have built their own chain very, very easily or done this somewhere else, and using like an Arbitrum stack to do a layer 2 on Ethereum, I think reignited a narrative that Ethereum and layer 2s were kind of dead. And I think Ethereum will perform well as a result of that. So I think there's a lot of reasons to be bullish on Robinhood Chain. I haven't personally used it. Like, I'm not a meme coin trader, and, I'm not like, yeah, the tokenization and RWA aspects aren't really there yet. But I think that having a name like that and doing it on one of our blockchains instead of replacing it with their own is extremely bullish for the space.
You said that this is bullish for Ethereum, but on the other hand, we pretty much know that the value that is accrued on layer 2s don't usually flow back into ETH, the asset. A large portion of the revenue that Robinhood Chain gains is going to flow into the Arbitrum ecosystem, which is this layer 2 on Ethereum. So don't you think that in this situation, ETH is not really going to benefit from this?
Well, I mean, ETH is the gas token for Robinhood Chain, right? So even if the economics don't, the narrative does, right? Of course, like, listen, I don't think that any of the chains are currently valued for their economic activity, right? And even if they have massively increased economic activity, the prices blew so beyond what they would be worth based on speculation in previous cycles that you can make the argument that it's impossible for an existing chain to ever catch up to its utility, because you have to think about utility of a layer 1 or a layer 2 is it's commoditized, right? I mean, it's a race to the bottom. Like, you want to be cheaper, faster, to the point where they cost effectively nothing, but the side effect of that is that you make nearly nothing by being that token, right? So it's all about, I think, network effects and narrative, as it always is in crypto. And I think it's very powerful that Robinhood Chain uses ETH as, their native gas token, and that you need ETH bridged onto Robinhood Chain to use it. Right. I think it just gets a lot more people familiar with it. And more importantly, as I said, it's just a rekindling of a narrative for Ethereum, when Ethereum also had those same kind of, like, Ethereum was going through its own strategy Saylor moment of its own in a different way a few months ago, right? I mean, people were fed up with Vitalik. They were, the Ethereum Foundation falling apart, this massive exodus away from it. And then Vitalik finally came out and said, the Ethereum Foundation stepping back. We just want to be a node. Right. And I think that, like with strategy, they kind of priced the Ethereum Foundation problems out of the market when he said those things, and gave Ethereum a new chance to breathe. And since that, I mean, maybe that's a good example of what will happen with Bitcoin. It happened a little earlier, and Ethereum has kind of started to rise since, it's even been outperforming Bitcoin for a few weeks. Looks like it's breaking out by any technical metric that you can look at. And I think that has a lot to do with I mean, Tom Lee obviously was the first spark, although it went way down since then. But having a different cheerleader. And then now I think people are really starting to say, hey, it's still like, BlackRock and Biddle, these things are all still really on Ethereum. That's where the money is. DeFi is coming back. There's a lot less fear around Aave and all these things that there was sort of at peak FUD with the exploits. So listen, it's not like I'm calling ETH ultrasound money. Like, I've never been one of those people. I don't think it's a competitor to Bitcoin, right? But I do think that there's a more compelling narrative for ETH than there has been in a very long time.
Okay, so you don't think that there is like a big problem with the tokenomics that prevent ETH, the asset, from gaining value?
No, I think what gives crypto value is how many people want to buy it versus how many people want to sell it. And there's no better marketing for an asset than the price going up. It's humans that are going to do this. So no, I don't think that ETH's price is justified by its current utility or usage as a network, right? You can't value it like a stock because it would be repriced much lower, but I don't think that matters. I think that if we're at this point and it feels beat down and people start to get excited again, they'll start to buy ETH.
So you don't agree with Hoffman, who sold his own ETH stack a couple of months ago, saying that basically, I guess you saw that, right? One of the biggest proponents
Yeah,
of
I
ETH.
agree with him in that it's not ultrasound money, which was his thesis, but I would have told you that he should have sold his ETH a long time ago if he thought that it was ultrasound money, because I never agreed with that thesis. Right. And nothing against him. Like, but to my knowledge, they were kind of pushing the ultrasound money. It's deflationary. It's better money. And he came to the conclusion that that was wrong and sold his Ethereum. So to his credit, I believe in a term I like called strong opinions loosely held. So no matter how much you believe in anything, you're either a religious believer and nothing convinces you, or you're actually a smart person. And when you get new data or information, you change your opinion. If it is justified, he changed his opinion. So I think his first opinion was wrong, but I think he came to the right conclusion. And if that was the reason he was holding ETH, he should have absolutely sold it. If he was holding it because he believed it would be ultrasound money and failed to believe that anymore, there's no reason that he should personally be doing that. That's not the reason that I've bought it or that I think a lot of people do.
Okay, and now just going towards the end of the conversation, I wanted to touch upon the idea of this DeFi renaissance. So we are seeing that DeFi tokens are being discussed a lot lately because there is a bullish narrative around them. Even Standard Chartered sort of put out a very bullish outlook on DeFi, saying that the tokenized asset market will grow exponentially by 2030, reaching probably around $4 trillion, if I'm not mistaken. And DeFi would benefit a lot from the growth of this ecosystem. Do you believe in this thesis? And if you had to choose just one DeFi asset to hold until 2030, which one would that be?
Well, okay, so I believe in the thesis, but I don't. I agree with the thesis, but I don't agree with their conclusion. Right. So I remember reading into this, and it was first that I don't remember the order, but I believe they first looked at Uniswap, and they gave guidance on Uniswap that was like Uniswap would go to X thousands of dollars. I don't remember what it was, 27, 30X, whatever it was. And their thinking was that if the tokenization and RWA market increases by whatever number that was, it was somewhere near 30X, if I remember correctly, but don't quote me on it, 27, 30X to whatever, 27 trillion, whatever it was going to be. That the token would go up equivalently. So I agree that the tokenization and RWA market will likely become much bigger by that time. I don't know if it'll be 27, 30, 10, 100 times. I don't think that you can then say that an individual token that's been around for a really long time matches that exact increase in price, which is how they extrapolated their targets. And then they did the same thing for Aave, right? Whatever it was Aave's $80, it's going to 3,000. Based on, a 30X appreciation based on tokenization 30X. And that's like somehow believing that the value of an exact token is going to reflect the broader market, which will have adoption from multiple tokens and chains and platforms and all of these things. So I don't think you can say this market in TVL goes up 30X, so every token that you can mention in this market also goes up 30X. That doesn't make sense to me. But the broad premise I agree with. I don't really. I mean, I still own Uniswap from the airdrop. I don't own any Aave, but I do think that they'll do well. But to me, and maybe I'm just an idiot for having this same sort of belief, and I probably said it in April of 2022 when we talked back then. But I think that the strategy that's the safest is still to own the underlying infrastructure. So maybe the best DeFi tokens are Ethereum and Solana, are the safest. Right? You don't need to go pick winners. You just own the plumbing and you assume that the narrative will accrue there and that the TVL will accrue there and you own those.
Okay, and now final question. I want to touch upon the SpaceX IPO. So a lot of people are discussing that IPO still now because the price of the SpaceX stock has fallen below the price that was at the moment of the IPO. So a lot of people, of course, are disappointed. And Mark Yusko, I was talking to him a couple of weeks ago. He was sort of predicting that, saying that the valuation was incredibly inflated and that he was criticizing Elon Musk, saying that he was using investors as exit liquidity. Do you agree with his criticism?
I don't think that Elon Musk himself was intentionally trying to price this thing to use retail as exit liquidity. Like, I don't think he needed, he was worth 900 billion or a trillion. I don't think matters to him very much. But I do think that structurally the SpaceX IPO was a guaranteed extraction from retail. And I, like Mark, was screaming about this before, during, and after. And this is exactly what was almost mathematically guaranteed to happen. There's a thing about humans. They're really stupid. And they do dumb things all the time. I'm one of them. I do dumb things all the time, but I wasn't dumb enough to buy that at the top. And when you saw stories of people putting their entire retirement into SpaceX at $215 who don't understand low float as well as crypto people do, you just shake your head and you knew that the top was in. So the only button that existed for SpaceX after IPO was buy. I don't think people really realize it, but since everybody was vested and locked, when the shares came on the market, there's nobody to sell. And there's certainly nobody who's at 100x profit like the early investors there to sell yet, right? And they're slowly going to be coming online now over the coming months. So this will probably actually get much uglier. But the only shares that were available to sell were ones that people bought on the market once it IPO'd, right? So you had nobody to sell to them and prices going up and up and up because people were buying, and eventually they become sellers. So it's like mathematically guaranteed structurally that that was going to happen. And so, I applaud the people who got in early, saw that was going to happen, sold at 200 and said, I'll come back in, a few months or years and see where price is. But we're going to be unlocking for the next 5-6 months. Those people are up 1000x. I don't know the exact number, but the early investors, 100x, 500x, 1000x, they're going to sell, and so their shares aren't even out there yet. So you can look at the valuation or the huge numbers or whatever and debate whether it was justified. It wasn't anyways. But then when you look at just how many shares even existed to be bought and sold, this was guaranteed.